Yeah.
All right. We are back.
Look at us. We're here.
We are here. And we got to stop taking breaks.
It's not my fault. I blame you.
Yeah, well,
Yeah.
I forgot the camera. Today we're just going to kind of go over tax season is officially over.
It's done. It's in the
for
books.
the majority of folks out there, and then some commissioner news, some maybe a little bit of direct file news, IRS news, and then you had something you want to talk about with like the states.
Yeah.
So let's go over kind of these are the filing stats that we have for tax season. These are ran through April 26th. This is on the IRS site. We'll leave it in the show notes. But it looks like all our numbers caught up.
Yeah, as they tend to do. It's always kind of throughout the year looks like it's running behind, but really towards the last few end dates, last couple of weeks and week after, it usually either runs comparatively or slightly up from the prior year's numbers.
Yeah. Look, the total returns received up almost 1%.
Yeah.
What was the main thing that stuck out to me? It was, let me look. There was like $5 billion more dollars refunded with direct deposit.
Yeah, it looks like
Billion.
actually about $7 billion, 249 in 2024 up to 256 in 2025. So it looks like that's going to...
My math wasn't mathing there.
Yeah, really good on that one, buddy.
Just a couple bill.
Just a couple. But, yeah, I think as the years go on, that's becoming way more commonplace.
Well, I mean, they're not going to do the checks anymore either.
Yeah. So
supposedly.
That's going to be... Did they have I don't even remember the date on that. I think they talked about maybe doing it next year, but
I think it was...
That's going to have to probably be
there's going to be a transition period there, I think.
Yeah.
Especially with like all the systems they're using. You would think that there's going to be a transition.
Yeah. And, I mean, I would expect probably over, the next 5 years or better for that to finally be a firm rule, not just next year, but, I mean, at this point, why not? It's so much quicker. It's easier for them. Get your money way faster. Don't have to deal with maybe getting lost in the mail or all those other issues, moving and whatnot. So that's going to be a bigger push.
Yeah, the total number of refunds down almost 1.5%, but the amount is up. That was the average refund is up 3%.
Yep.
Website visits way down.
Way down. That's
gotta think that's AI related. You think? I don't know.
I don't know what it was. Down from almost down 200 million. Over 200 million. That's I don't know what would be cause of the push there, but maybe something towards the AI related or better search functions, more usage of other websites to get information. But I think the numbers prior to that over the years was way inflated, just people checking where's their stimulus and all that kind of stuff was probably a large jump for years prior. So those have gone by the wayside.
Yeah.
But overall, pretty consistent. It does look, returns filed through tax professionals up 2%. So,
yeah, because it was trending where the self-prepared was under, professionals were up, and then it looks like self-prepared almost made it to 1% increase. So, it kind of evened it back out at the end there.
Yeah, but overall, good year.
Yeah, wasn't a lot of hiccups. I mean, as long as they're not changing things last minute, I mean, it's can run pretty smoothly.
My side of things, everything seemed to looks like it ran pretty smoothly. No major disasters or hiccups that I was aware of. So,
yeah, so tax season's over. Now we're transitioning, moving into the summer, and then, getting ready for next season. We can transition to a little bit of IRS news. I mean, we won't talk a lot of this because these IRS commissioners keep changing every week. Seems like.
Yeah.
It looks like they've appointed Michael Faulkender. It says here on the Journal of Accountancy. Let's see. He's the acting commissioner, and the fourth since Trump took office. It looks like he replaced Gary Shapley, who only made it a week.
Yeah, looks like we're averaging about one a month here, so we'll see if we get a firm one in there. But.
I think there's just a lot of stuff going on, and people are disagreeing with things that are happening, and they're just interchanging because really they haven't appointed the person that Trump appointed originally, right. Billy Long. He hasn't been voted in yet.
Sworn in or voted in, yeah. So we're just kind of cycling through acting ones. So
yeah,
I didn't realize there had already been fourth since January 20th.
The last time we had a pod, there was two other ones.
Yeah.
But yeah, so this Faulkender is now the acting IRS commissioner, which
be taking bets on how long this one will last.
Yeah, I'm not sure. This is a article I saw some interest in on CNBC. This is basically, as of March of this year, the IRS workforce has fallen by more than 11,000 employees. That's 11%. It looks like some of the DOGE cuts are resulting in a lot of reduction in staff.
Yeah, I mean, definitely a far less percentage that have been cut than what was earlier predicted of the nearly 50% that could be potentially cut. But it does seem, as of March, the agency lost 3,623 revenue agents, and then losing 1 in 3 auditors. So,
yeah, they say in this is still a priority of collections, right? Because, when they got all the funding from the act during the Biden administration, that you saw an increase in those collections. And they were doing pretty good as far as collecting some of that money that they normally wouldn't.
Yeah.
But it looks like since this department is getting some budget cuts, that something's got to give.
Yeah. Just seems. Wonder how smoothly it's going to run, with the vast reduction of it, because I know they're caught up-ish from a lot of the backup they've had, but
like the paper stuff.
Yeah, but to kind of take an axe into a department that, it definitely is behind in some facet.
Yeah,
it seems, not to be really efficient there, but also I guess if you kind of relate it to, kind of maybe a little bit connected to if you look at the numbers of the website usage being way down, so maybe they're becoming more efficient in certain areas to where the staff that they had priorly had to this administration wasn't completely necessary.
Mm-hmm.
It does seem just seems strange to me to kind of wrap my head around to see, because I don't really exactly know where they're at as far as caught up or running smoothly. Obviously, maybe not running so smoothly as we've had 4 different acting commissioners over 4 months.
I don't understand. Like, I think it just needs the IRS department, like their systems. They got to take a look at those.
Yeah.
They're gonna try to implement AI. I would assume. That would help with losing staff. If you got DOGE digging around in there, I mean, there's enough smart young people in there that can develop some kind of system that can work all this more efficient. So I think that's something for the IRS in the future is, upgrading the systems, using less people, but still maintaining an efficiency level that we're all wanting.
Yeah.
So I don't know if this is going to be bad, like next tax season is just going to be a nightmare because all the staff's going away from the IRS, I don't think that is going to be the case.
Yeah.
I hope it's not.
Yeah, I would assume, though, with all innovations and especially with AI, that it's going to make up for a lot for that. Maybe uses in processing paper returns or processing audits and running through all that to where that can tackle a large portion of those and spit out the ones that need manual review from certain agents. So I could see, but I haven't really read too much about or seen much about how they're implementing that, if they are in the process of implementing it already.
Yeah. Well, one of the other things that I did notice is direct file. Looks like it's going to be gone.
Yeah, that opens up some resources and availability.
I think
focusing so much on this that, might have been a good idea in theory, but just in practice wasn't as beneficial as they might have hoped for it to be.
It's kind of like it looked like it was like the low-hanging fruit.
Yeah.
It's like when you have DOGE coming in, looking at the department, and it says, okay, well, what's this direct file system? Well, we already have free filing systems.
Yeah.
Why are we creating our own?
Especially with all the availability there is out there.
Sure.
With other companies that do have, free file availabilities. And then, obviously you got your taxpayers with, the basic simple returns are maybe not as expensive as other returns, maybe not free, but there's definitely a lot of different markets to where this was probably an easy one to access, an unnecessary use of resources.
Right. Yeah, because they were expanding it last year. I think they added, was it 14 states?
I think there's more states that were added to the
24
availability.
total states, I think.
Yeah.
And from a report I read, the people that used it liked it, so I don't think it was anything to do with that. I think it was just more of the resources. And again, it was the theme coming in was, what can we cut?
Yeah.
That's deemed unnecessary. And this was one of the things that it looks like got picked on. So
yeah, and I don't know if I ever really ended up seeing the stats, because this would have been the second year of it. And the first year was kind of only available to
last year was a
certain
pilot.
Individuals inside government, maybe. And then I don't know if this one was limited to uses or if it was kind of available to the public if you lived in those states and you qualified based off the type of return you were filing.
Yeah, I think last year, I think they pushed 140,000 returns through it.
Something like that.
They added more states this year, so I haven't seen the numbers yet come out, but I can only imagine it, largely increased the amount of returns that they processed through there. But again, I just think DOGE and Trump and his initiative to cut spending this one just got axed.
Yeah. I'm sure it definitely took and pulled away from a lot of other departments and kind of just, I'm not sure what it cost, but I can't imagine it was a inexpensive venture, and it was probably taking a lot of resources up that could be used elsewhere. And
I did read somewhere that they did find like $1 million they didn't report that they spent on this program.
Oh, yeah.
And so they were like, probably that was it for them.
Yeah.
But I don't know how much that's true. There's a lot of news going around that they found, extra spending.
Yeah.
I don't know where these reports are.
Every day is kind of flooded with, we found billions of dollars here or a trillion there. And who knows what the real story is as we sit now. But yeah, ultimately, I never understood why they tried to put this in the process with all the other sources or resources that are out there available to taxpayers.
Yeah, it seemed redundant.
They're trying to monopolize the tax filing industry.
So yeah, that was enough of IRS stuff. But you had something from the Journal of Accountancy you saw that you kind of wanted to go over.
Yeah, I just thought this was interesting. We'll see if it comes into play, but they're kind of coming out with a new provision maybe in the coming year for uniform non-resident state income tax withholding rules. So kind of, hopefully, if this does get passed and implemented, it's going to simplify a lot of tax returns, in my opinion, especially the ones where you have people that travel a lot for work, do work in other states, you know, your long-haul truck drivers and whatnot, and other individuals that, you know, have their resident state, but their work requires them to go work in other states and earn income. Well, then when you do that, you start taking into having to file all these other non-resident state tax returns. What this kind of states is if you know, do work in another state and earn the wages that would require you to file a tax return for that non-resident state, that if you had less than 30 days of work in that state, that you're basically, that income is not going to be taxed at that other state level. So you're only going to be taxed in your resident state as long as your work in other states was 30 days or less.
And this is trying to get passed for all states? It would be across the board?
It looks like it would be. It doesn't really say anything state specific. It looks like it's going to try to encompass that, you know, if you're a resident of Florida and you go, you know, here we don't have state taxes. That would be my question. Is it going to apply to if your resident state is one that doesn't tax? Would that still extend? Which it kind of sounds like it would.
So if I live in Florida as my resident state, work in Georgia for 28 days, my income that I made in Georgia will not be taxed by Georgia.
That's what it looks like it would be, which I would say is almost a good idea here. And it also way simplifies, you know, a tax return process, because if you have one that has 12, 13 different states, that gets kind of a pain. Then you got to worry about making sure that you're filing that state return correctly as a non-resident, and then B, making sure you're taking care of the credit for taxes paid to other states in your resident state, and then you just have a mess of a return with all this other
they
issues
got like
going on.
5 states on there with credit to taxes paid for other states, all that kind of stuff. Yeah, it could definitely simplify
then when
it.
you're doing that, maybe you have certain credits in other states that you're not really aware of, so this could really simplify a tax return down to what took hours and hours and hours to, you know, just your normal basic preparation time. Not to mention, though, it would also simplify a payroll process, so you don't have all those issues, and make sure you're having the withholdings for those other states and reported to those other states, making sure there's no issues there. I thought that was interesting. They did, however, take into account the large wage earners as professional athletes traveling around. So
can only imagine a professional baseball player's tax return.
Oh gosh, they probably saw this and got excited for a second. But that is people that there are a few individuals that are excluded from this 30-day standard, being professional athletes, entertainers, certain film workers, and certain public figures. So those rules are still going to apply to them.
What deems as professional?
Well,
money.
Might have to.
Or do you have to hit like 20 homers to actually be professional?
Like, what if I am a bullpen catcher, which is probably the sweetest job?
Yeah, that would be a good one.
Yeah, but no, your boy LeBron's still gonna have to pay everywhere. But I thought it'd be interesting. I would like that if this would happen. It would definitely, you know, simplify some returns where you have some of your taxpayer customers that have these just large returns that, you know, they do all this work in other states, but they're not necessarily in the state for very long, but they make enough in that state that would require them to file the return. So
it's very interesting.
Yeah, it could.
So you file people that travel a lot, like construction.
Yeah.
A lot of those types of jobs. I mean,
consulting jobs.
We'll leave this in the show notes. Definitely need to keep a lookout for
something
this.
To keep an eye on. It does seem like it has some traction to it. It's something I've always kind of thought like it would make sense. You know, at least there's a day requirement, and not necessarily keeping it to their. You know, every state has their own requirements as far as, you know, how much you earn here, then you're required to file a certain threshold. So it would make that kind of less confusing. Tax returns with large amount of states that, you know, I've had ones that are 15 states long, and it's just a lot of there, and then making sure the credits are right, and it kind of just becomes very time consuming. And,
it can make your eyes cross for sure.
Yeah.
And I think it's a win for professionals. I think it's a win for taxpayers as well.
Exactly. And, the employers, having to worry about all that payroll and making sure they get it right. Because a lot of the times, too, when you're preparing a return, you get a W-2 that has multi-states on there, but the income isn't listed right. So then going back and forth and trying to make sure what amount was earned in which state, can become a very time-consuming process. So I'm for it. I hope to see it. But
yeah, we'll keep our eye out.
Something to keep an eye out.
Because it looks like it's being backed by the AICPA.
Yeah. So it's got a little bit of traction. We'll have to just keep an eye out and see what happens with that and what other changes start to come through, as I'm sure this being early on, there's a lot of ideas being floated around what could come for next year. So as always, it's kind of a potential, but I guess we won't really know until we're closer to the start of next season and what gets passed and what kind of changes are really going to be in effect for the 26 filing season.
Yeah. Cool. No, that's a good one.
Yeah.
That was pretty much it for the day. Summer, we got trade shows everywhere. So, yep, we got a lot to get ready for. Yeah, so that's what kind of I'm focused on right now is getting those together. So, and then, as we go forward is just getting ready for next year's software and that release. So
getting those builds ready and just always comes back so quick. Just one big circle. Before you know it, tax season will be back here. But
it's like a wave. You just come up for air and breathe, get a good, nice, deep breath, and then there's another wave.
Just in this nice, calm process. Enjoy it while it lasts, and then pretty soon we'll be gearing up and starting the next filing season before we know it. But I'm not going to think about that right now. Enjoy the little bit of a reprieve. We just ended season, and we'll get back to it when we need to.
All right, man. Well, that's it for today's pod, unless you got anything else.
I sure don't.
All right. I will see you next time.
Next time.
Next time.
We'll say next time for now.
Next time.